Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, the US takes nearly 10% stake in Intel, and President Trump celebrating that he got it for zero. What this means for future deals. Plus, the president of South Korea heads to the White House with tech leaders from Samsung and SK Hynix. Details on that meeting. And gaming gets patriotic. Why the Esports World Cup Foundation has announced a new biannual tournament for nations. But first, let's check in on these markets. Let's just check in on Intel, because that is the stock that's on the move that we want to keep an eye out. General benchmarks flat, but Intel up more than 2%. We were in the red just for a moment, but now we get the real devil in the details of what that almost 10% stake looks like from the government, and the president seeming to feel that he's got it for zero. Let's get into the details, because I'm pleased to say Mike Shepard is with us, of course, who really helps lead our coverage of the intersection of technology in Washington. And Mike, it is interesting that, of course, the money comes from that was already promised to Intel. Remind us of the detail of the deal.
Well, so in the broad strokes, it's a nearly 10% stake totaling more than 400 million shares going to the U.S. government. And this, Carol, is in exchange for what has not yet been spent out of the grant money that was to go to Intel through the Chips and Science Act. Remember, this is the law that was passed under President Joe Biden, designed to spur domestic chip manufacturing, helping makers like Intel, but others, including TSMC and Samsung as well, get fabs and plants up and running here in the U.S. Now, Donald Trump is talking about this as really the U.S. government getting something for nothing. Although, if you think about it, that's almost $8.9 billion in unspent CHIPS Act money. And so there is a little bit of something in there. Many are looking upon this, Kara, as really an unprecedented intervention in a company, especially when you think about how sacrosanct these principles of the free market have been, not only for Republicans, but for Democrats, too, and how it has been looked on with really some skepticism since then. Last week, we interviewed former Vice President Mike Pence and former Biden, economic Director Lael Brainerd on successive days, and each expressed their own misgivings and skepticism about the precedent of the U.S. government intervening in a company without a crisis actually unfolding.
Many, though, would frame it from the administration's side that this is a focus on national security, that this is a crisis for Intel to be able to be and turn it around as a national winner of manufacturing. But will government intervention do that, Mike?
Well, that's a great question, Carol, and really that is how they framed it. They didn't quite use the crisis word, but they did stress the urgency on the national security side of having a U.S. flag company leading the way when it comes to chip production. And curiously, in the announcement, one thing was missing, and that was mention of the new plant in Ohio that you and I have talked about a lot. And this is the one that has been planned by Intel as part of its revival, the one that was started under the former chief executive officer, Pat Gelsinger, and it was really destined to be a flagship of that effort, but it has since been delayed. And this is a massive undertaking. It has been pushed back into the next decade, and they really need this underway to put Intel really back into the running when it comes to making those kinds of advanced chips. Their biggest challenge right now, Carol, is finding the customers to be able to sustain such a massive investment in that Ohio plant. And right now, they don't quite have enough. And the interesting wrinkle in this is that Donald Trump, by leading the U.S. government into taking this stake, in a way positions himself as CEO of everything. And this is a role he has liked to play. He has relished pushing companies into expanding their investments in the U.S. We've seen it on the tech front. We saw it just a few weeks ago with Apple and expanding their investments in the U.S. So will he take some sort of a more active role in trying to drum up customers to help Intel and its CEO, Lip-Bu Tan, who Trump has met in recent weeks at the White House and really was the one who Trump was able to persuade to have this exchange of a stake in exchange for CHIPS Act money.
Mike Shepard bringing us through what is an unprecedented piece of news. We thank you. Now, NVIDIA potentially could be a future buyer of Intel's made chips, but all eyes are on NVIDIA, more importantly for its earnings coming out Wednesday, with the investors seeing it as a key test of broader AI impact and demand. For more, Bloomberg Equities reporter Carmen Reinecke is here with us. It is the bellwether in many ways, but analysts in particular have got excited about what the revenue could look like coming for this fiscal quarter.
Yeah, that's really true. I mean, it's something that we see actually kind of cyclically around earnings, that analysts boost sort of their price targets for companies ahead of the results. They sort of rally up to them and everything kind of resets. And in the last week, we had at least 9 analysts increase their price targets for NVIDIA. So they see upside, at least over the next 12 months. They're excited going into this report. And you're right. I mean, revenue growth is the thing that everybody is always watching with NVIDIA. They put up incredible numbers. I think this quarter analysts are expecting revenue to jump 48% from last year, $46 billion. That is just, it's not something that we see every day.
Certainly for a $4 trillion company.
Exactly.
And you're expecting more than 50% growth in earnings per share. Many, though, would question China as the area of concern. Look, we're just talking about President Trump having unprecedented impact on businesses, and that deal to sell H20s is unprecedented, and we're worried about demand.
Totally, and I think that's something that analysts and investors are really going to be listening to on the call. What Jensen says about China demand, what total market they're forecasting that they're going to be able to see. I think people hadn't factored in China revenue maybe in the next few quarters, right? We know that things are sort of up in the air there, but going through fiscal 2027, 2028 for NVIDIA, that's something that everybody hoped was going to come back online. And so even though it's not a huge part of their overall revenue, I think it's about 15%, maybe a little bit less, it's going to matter. It's a big market, and I mean, if it goes to zero, that's a considerable hit.
And it's going to matter as we question AI valuations more broadly across the spectrum. It's great to have Carmen Reinecke. We thank you. It's a very well-read piece today. Let's get broader investor take. Bring in Erin Brown, Managing Director and Portfolio Manager at PIMCO, and just bring us the context of last week. Prior, of course, to Jackson Hole and euphoria on Friday, we were worried about overall frothy valuations in the area of AI. Is NVIDIA going to be a key test on that?
I think it is. I mean, I think that really is keeping the market right now with respect to the AI trade on pause, waiting for more news from NVIDIA to see what earnings bears, and really to see if they've been able to continue to grow into what are really lofty growth numbers. You've certainly seen AI come under pressure as the market's been rallying to new highs, but broadening out outside of AI. And so NVIDIA, I think, is front and center for this, at least for the market this week with respect to the AI trade.
Have you questioned anything fundamentally, though, that changed in the last week, when we suddenly were awash with concerns about MIT writings or whether Sam Altman saw a bubble or not?
Yeah, I think the MIT research note really laid bare the fact that right now implementation and adoption is really critical in terms of enterprise integration, being able to appropriately adopt these models into the enterprise environment. And so I think the MIT paper was a little bit misunderstood in that, yes, they're saying that only 5% are productive, but where they see the real hindrance is not with the models themselves, but rather with enterprises being able to implement effectively those models into their software environments. And so what I think is really key for the next leg for AI adoption and growth is going to be the software companies and the implementers that are able to take these effective ChatGPT or other models and integrate them into the business environment. And so software companies that can do that effectively are really going to be the winners, I think, in the next leg of this AI trade.
Look, we got worried about Intuit or Workday earnings at the end of last week. We've been worried about some of the European players. SAP has been under pressure, and others as we worried about software sort of being eaten by AI. But then on the flip side, a Palantir, ultimately a software company, has been the best performing company of the year, even with some of the recent sell-off. Do you generally think that software is getting beaten up too much, or do you think companies are able to embrace and pivot with AI?
I think right now we're really seeing the winners and the losers and the bifurcation of the winners and losers in the software environment. Companies that are like Palantir that have been really effectively able to deploy AI, use it, and then deliver it effectively to their customers are the winners right now in this environment, and I think are going to persist to be the winners. I think the companies that are being left behind and the laggards right now are the companies where Palantir is sort of eating their lunch and taking, business from them. And so, there's going to be winners and losers in any environment when you see these disruptions occur. But right now, we're really seeing sort of the fight of it. But I think broadly speaking, as an industry group, software should be the ones that are implementing AI into enterprise environments and being able to grow into what I think is a greater demand environment going forward. We've moved on from just the picks and shovels of AI and now really looking to the deployment stage and the monetization stage, and that's where software should really shine.
NVIDIA is the picks and shovels. It's the key test this week in terms of earnings. What are you hearing in terms of, the depreciation of the assets that ultimately NVIDIA is selling to all of these hyperscalers? It's where the demand goes, but how long are they sticking around? Have you managed to sort of model that out?
No, I mean, not explicitly in terms of modeling it out, but I think right now we're still in very early stages of this, and so I think there still is quite a long runway for NVIDIA chips. But you are seeing that, we're seeing, good scale adoption, but we're also seeing a lot of innovation, and that should really just keep demand, pretty robust for the picks and shovels as we continue to innovate, those, the entry trips into the AI space.
Erin Brown, really great context, digging deep in tech. We so appreciate it. Portfolio manager over at PIMCO, thank you. Meanwhile, we've had some breaking news, and it all surrounds big players in AI. And it's in fact Elon Musk suing Apple and OpenAI over an alleged arrangement on its iPhone. Of course, OpenAI has been in some ways integrated within Apple's offerings. Elon Musk taking issue with that. He took his fight to X last week, concerned about the rankings on Apple App Store of certain generative AI products and feeling that X doesn't get enough love there. We'll dig deep on that story. We're still up 0.4% on Apple. Coming up, though, we're going to be talking more trade, joined by Garno Global's Eliza Tobin, on what to expect from the meeting between Donald Trump and President of South Korea and its tech giants. This is Bloomberg Tech. South Korean President Lee Jae-myung is set to meet with President Trump at the White House today. In focus will be South Korea's $350 billion pledge for projects in the United States, announced a month ago, but pretty few details on what actually is known. Meanwhile, several Korean firms already have existing U.S. investment plans. Samsung planning for a multi-billion-dollar semiconductor plant in Texas, or Hyundai with its $21 billion pledge to expand future industries and EV charging production, or even TSMC with its $100 billion investment in U.S. chip manufacturing operations. President Lee will be joined by the leaders of some of those companies in today's meeting. Let's bring in Eliza Tobin, Managing Director of Garno Global, who can help break down ultimately what these sorts of negotiations look like and what, perhaps if you're an equity holder in a Samsung or in a TSMC, what future deals could look like.
Caroline, it's great to be on with you.
Yeah, Eliza, talk us through as to what we anticipate. Will there be semiconductor tariffs coming this direction for certain of these companies? Will they get a carve out because they're investing so much? Will we hear anything about equity stakes being taken by leaders like the President of the United States and the US government in certain semiconductor companies?
Yeah, Caroline, you've really put your finger on it. This is what everyone is wondering. This is what we're all waiting to see. What is going to be the shape of the semiconductor tariffs, these Section 232 tariff investigations that Commerce has been doing for months, and they keep kicking the can down the road. What's really complicating things is that these are now being kind of merged and mixed up with the ongoing trade negotiations that the United States is having with South Korea, Japan, the EU, and all these these other partners. And so these countries are racing to get exemptions or some kind of guarantee of a lower rate of tariffs. But nothing really is certain until you see that deal, that handshake in the Oval Office between Donald Trump and his South Korean counterpart. So really looking forward, what I'm waiting to see with all the dust settling with semiconductor tariffs is how is it all going to net out? Are we going to see a distinction between China on the one side and U.S. trusted allies and partners on the other hand, which are trusted suppliers and key parts of the semiconductor supply chain, players like Samsung and SK Hynix.
I'm just going to jump in there, Liza. I like the idea that you're calling them trusted partners and allies. And then we get the latest post from President Trump sent to, seemingly, the president of South Korea ahead of the meeting. What is going on in South Korea, ? Seems like a purge or a revolution. We can't have that and do business there. How are leaders of countries meant to navigate what they thought as allyship when they're about to go into a meeting and receive sort of slightly confusing statements such as this?
Yeah, this is not really a great sign for the upcoming talks that we're about to see. For a long time, even dating back to his first term, President Trump was putting pressure on allies like the Koreans and the Japanese in particular on at least two fronts, so both trade and defense spending. He would always want to know how much are these allies paying for their own defense, as well as, what is the trade balance. So I think this is an unfortunate signal that Korea is going to be under pressure on both fronts. And again, I think when we see the dust settle of both the administration's trade negotiations as well as the semiconductor tariffs, are we going to see a distinction between China, which I think there's a bipartisan consensus that they're a threat and an adversary, versus these other countries that are part of the semiconductor ecosystem and that we depend on, from Europe to Asia. So is there going to be a distinction? Or is there going to be a generally lower tariff rate on the allies and partners than there is for China? I don't think anyone knows for sure, and we won't know until the Commerce Department comes out with the results of the investigation.
And Liza, put it into the context of what did just happen officially on Friday. We'd known and thought it was coming for a while, the 10% equity stake in Intel by basically taking money already promised them by the Chips and Science Act. Liza, this ultimately is meant to make the US less dependent on a TSMC and on a Samsung, but still in the interim, we want them to build manufacturing here.
Yeah, the Intel deal is really interesting. So I like to kind of zoom out and think about, why does the U.S. government care about the fate of Intel either? Anyway, this isn't just a normal business deal. We have to remember that the government is not a business. And so we should be evaluating what's going on here, not just as a business deal, but it's really more like an insurance policy, what the U.S. government has been doing even since the Biden administration to try to rescue Intel. So your audience will be well aware, the United States is almost entirely dependent on Taiwan, on TSMC, for the supply of advanced semiconductors. And that's a real problem. If we ever lost access to the chips, it would be economic catastrophe. So the U.S. government sort of stepping in to intervene, I think it is rational to see this as dealing with an economic emergency. So extraordinary intervention by the government is, in fact, required. The question I'm thinking of is this the right kind of government intervention? And what, in the history of industrial strategy, an equity deal might not be the right play. What these firms that are kind of in strategic sectors that we can't allow to fail often need is a long-term, reliable source of demand. And that's where the U.S. government can sometimes step in more effectively. I will just remind the audience why Intel is special.
Yeah.
Under the CHIPS Act program, they became the steward of something called the Secure Enclave program. So that was set up to have kind of a minimum viable number of chips chips being produced here in the United States for needs like defense and national security. So it's not realistic to think we're going to reshore the entire semiconductor supply chain, but having this goal of kind of an insurance policy to make sure we can produce at least some chips in the event of a contingency is really important.
Great context. Liza Tobin, thank you so much, Managing Director at Gartner Global. Elon Musk suing Apple and OpenAI over an alleged arrangement on its iPhones, accusing the two companies of unfairly favoring OpenAI on its smartphones and thwarting competition, such as Musk's Grok. Bloomberg Consumer Tech Managing Editor is with us, Mark Gurman, who knows a thing or two about Apple. I mean, he threatened this earlier this month on X, and now he's gone through with that threat. Ultimately, could it do anything to the relationship that OpenAI does have with Apple and vice versa?
I don't see so. I mean, if they consider this an antitrust violation, that being the courts or the government or what have you, what Apple would have to do is open up what they call extensions within Siri. So right now, the OpenAI relationship is what's called an extension. In Siri, if it doesn't understand one of your commands or it doesn't have the knowledge to answer one of your commands, it uses OpenAI's ChatGPT as a fallback option. Now, when Apple introduced this functionality, it said that they would have other available AI services, right? And so they said that Gemini would be there. Gemini never actually came to fruition there. There's a lot more behind the scenes with the search engine lawsuit, working with Gemini on other facets that have gotten in the way of that. But it's possible that they open this up to third parties, allow XAI, allow Grok, allow Claude, allow different AI services in there, and that would certainly solve the issue. And Elon is right. They do give pretty hot promotion to some of the other AI companies in the App Store. They haven't done a lot of that promotion for Grok, and so maybe we'll see more of that from Apple. But all in all, I find this lawsuit to be frivolous. I don't personally consider it an antitrust situation, but it's obviously not up to me to decide. And it is a little surprising that Elon Musk actually went through with this.
Go to the context, of course, that you put forward in a story on Friday, that the relationship between Gemini AI and Apple does look like it might get closer.
So Apple's building a new version of Siri for next spring, and it's obviously much needed for reasons that I don't have to spend an hour listing now. But they basically have two paths. They can go completely in-house with the new version of Siri, and by in-house, I mean self-developed large language models to power it. Or they could use a third party to help out in terms of building the new Siri. So they've been talking to a bunch of possible partners to see if they're willing to power aspects of that new Siri. So they've been talking very much to Claude from Anthropic, and I believe eventually they'll reach some sort of agreement. But more recently, they started negotiations with Google about Google building a model based on its Gemini technology for Apple as well. So we'll see where they ultimately land in a few months.
And before that, we've got more hardware to come. And Mark Gurman, you've been writing about that throughout the weekend on Power On. I urge everyone to go and take a read and then listen. We thank you so much for joining us. Welcome back to Bloomberg Tech. Let's check in on a couple of stocks, because more broadly, the benchmarks are flat, but I'm looking at PDD up more than 1.2%, let's now call it. This is the owner of Temu, of course, actually reported slightly better than anticipated numbers. Revenue pushed up 7%. Look, it is the slowest pace of expansion in years for the Chinese e-commerce giant. However, it did manage to beat some pretty low expectations of analysts. Net income, that was on the downside, but really this is coming from galvanizing consumers. They're trying to offset this economic fallout from US tariffs, and a little bit of a relief today. Intel up 1.5%. This is the US government does take that 10% stake, does have President Trump saying they got it for zero, but he does want to show support, and this is all about having a domestic champion here in the United States when it comes to chip manufacturing. But that's all about the story of AI, isn't it? And let's talk about AI startup Perplexity, set to allow publishers the opportunity to actually share in revenue their articles generate. The move comes as the company faces pretty mounting criticism and legal action from media outlets over its use of their content. Bloomberg's Shireen Ghaffari, I'm pleased to say, is still here in New York, and I'm thrilled about it. What are we seeing in terms of Perplexity trying to fend off issues? This is all about Comet. This is all about, the actual, new product that they're offering and trying to share revenue there.
That's right. So Perplexity, as well as other AI companies, but they've really been one of the quickest, is making a big push into an AI browser, right? So having all the AI tools actually embedded into your web search and being able to sort of understand what you're seeing on the web and everything you're doing on your computer. At the same time, they want to be able to have high quality information navigation, right, for people when they are searching through different tabs. So they're integrating this new kind of premium tier of subscription that will allow you to actually get some more high quality news sources into your AI browser assistant and give 5% of that revenue share to publishers who partner with them.
Okay, so they're able to charge more and therefore allow some money to go to them, but that must be a fraction thus far of the actual use of publishers and what they're working on. And many have been fighting back at Perplexity for that.
That's right. And by the way, I misspoke. It's actually 80% of revenue share, which is high. And what I meant was it's $5 a month for the subscription. And yes, it comes at a time. I mean, this company has had, some fights with media companies in the past and continues to. Right? They have had accusations of plagiarism that they've denied. They have also more recently just sort of been facing copyright infringement lawsuits. They're not the only ones, right? Yeah. Almost every major AI company is facing these kinds of legal battles, but Perplexity in particular has sort of faced some criticism over that. And I think now they're trying to show that they can work with publishers. They have done some similar sharing of their revenue in the past, but that's been on ads. And this is one of the first to be on subscriptions.
And it's different, isn't it, from the just mega deals that we see OpenAI or maybe even Google, of which, of course, Perplexity has thrown their hat in the ring for a Chrome browser. What they've just been giving lump sums in some way to some of these publishing companies.
That's right. So Perplexity says they don't want to do these big one-off deals, that they actually think that it's more sustainable to do these long-term partnership or more structural sort of percentage partnerships of the actual subscription revenue or the ad revenue.
Shireen Ghaffari, we thank you for being in the house in New York. Now elsewhere in AI, Palantir down once again as investors question returns on AI investments and valuations. Concerns which have been hitting Palantir for at least 2 weeks now. Let's bring in Jefferies analyst Brent Thill. He's one of the most bearish analysts with a $60 price target and an underperform rating. And you just thought the valuation got totally out of whack. Has the fall rectified anything for you thus far?
No, I mean, it's still 70 times revenue we've ever seen a software company trade at this multiple. So as we've said, you can touch multiples like this, but you can never sustain or live. It's like living on the top of Mount Everest. You can get there, but you can't stay there. So again, the fundamentals of this company are blowing anyone's expectation, including ours, away. For them to put up a rule of 90, which is top line and bottom line margin combined equaling 90, is unheard of. So they are effectively on a different planet as it relates to their fundamentals. But the valuation is there as well. So I think we've tried to separate the two and saying the company is performing extremely well. We don't see anything like it in our coverage universe. However, we have seen this before where you saw Snowflake, Datadog, others that traded at those similar multiples. They never sustained, and it was a tough fall. So the minute the revenue growth decelerates, and we've had 8 quarters of accelerated revenue growth, once you see that decel, the multiple is a concern. So,
do you have a view on when that deceleration will actually have? Because you've said in your notes that you've got limited visibility, lumpiness in quarterly bookings. I mean, are this actually going to start showing up and convincing the retail investor that has helped drive it up and to the right?
Yeah, I mean, it's a good point. So the majority, a huge part of the investor base is retail. It's about 40%. And so our clients are institutions, and I don't speak to a lot of clients in Palantir because our institutions have basically valuation thresholds that they can't break through, and they've all seen this movie before in the last 20 years in our group. So from a retail perspective, it can keep working. When does it break? We don't see a breakdown in the fundamentals. I think the question becomes, the comps are going to start getting harder. And can they sustain that level of growth? And Dr. Karp, the CEO, has said this, that they expect headcount to actually shrink and they can grow revenue 10x on a shrinking employee workforce at Palantir, which is, to me, kind of mind-blowing, because if you think about it, you need a lot of Palantir people and services people to get the software working. How does this happen? Does AI make the software work? There's a couple things that just, I think everyone's trying to make sense of. That's one comment, that how do you grow 10x with that tiny of a workforce?
And Brent, you've outlined the issues of employees, but there are upside risks that you also detail, like that they actually do faster than expected monetization, particularly of the AIP, or they do get sustained commercial momentum. How long can the market remain irrational and others remain solvent?
Well, the market can remain irrational for a while. Again, remember, you're dealing with a retail install base. You're not dealing with an institutional base. So as big in the stock. So I'd just say that this could continue to go on. And this is the area that we've been wrong, which is the magnitude of and the duration of how long it would sustain. I mean, if you take the next closest multiple in software, and this is close to 70 times, it's Cloudflare at 20, 25 times. Yes. And then it falls off a cliff from there in terms of the multiples across our coverage. So you're just really dealing with something that is super unique. Their business is super unique. The execution has been incredible.
Right.
So there's been no real reason fundamentally to sell the stock other than, hey, the multiple is where it's at. So I think it's a hard one because, again, you have to give them credit. The product is working. The customers love it. And you look at the quality of the execution has been next to no one's been even close to them.
Well, they still remain the best performing stock in the S&P 500 despite the recent fall, but we'll see how much the momentum carries on. Brent, it's always so great to check in with you. Jefferies analyst, thanks for your time. Look, another defense tech company to watch. This one actually it's not part of the public markets yet, in fact, it's private, and it's called Saronic. It wants to speed up shipbuilding in the United States with the goal of securing US naval dominance, according to the CEO. We spoke with that CEO, Dino Mavroukas, about the shift that he's seeing in government interest.
I was in the SEAL teams for 11 years. My last 5 years were spent on SEAL Team 6. That was from 2004 to 2015. I say that to say this. This is the fastest that I've seen the military and the government move to adopt anything in my life. Now, that is extremely encouraging from a business and an operational perspective, but it should also be concerning when we think about why is that happening, right? The potential threat with China in the South Pacific. We need to move, and we need to move now. And that's why we're operating so quickly here at Saronic. We're investing private capital to build the technology that our warfighters need and get those solutions in their hands as fast as possible.
What else do you need, Dino? You talked about how you're building the infrastructure and the talent, but what is it that keeps you up at night, that stops and holds you back?
When we think about what we need, I break it down to talent, customer, capital. If you bring those three things together, there's magic that is happening here at Saronic. What I mean by that is we have a truly world-class team. Our co-founders come from phenomenal companies with phenomenal backgrounds. We have over 800 employees now across the country and actually across the world. We've opened locations in Australia and the UK as well. Capital, we have some of the world's largest and best investors, 8VC, Andreessen Horowitz, and the list goes on.
And you've got commercial customers as well. Just to round things out, how big a sector could that be in terms of demand?
I mean, that we look at the commercial sector as absolutely critical. I mean, $100 billion plus commercial maritime market. And here's the thing that I point out to people when you're focusing on defense. It's you need a strong commercial industry to have a strong defense industry. We build all of our products for dual use, defense and commercial. What that lets us do is diversify our revenue base, invest more dollars into R&D to build better solutions for the government, build robust and reliable supply chains that can scale, take advantage of economies of scale. Like, you have to build for commercial use cases as well. The days of building one-off bespoke solutions for the government are just over. We need to be building ships by the hundreds and boats by the thousands. And that's what we're doing at Saronic.
And you've been able to make your supply chain work to fit that at the moment, because with tariffs coming in and a changing of the rules around metals and supplies, how has that been for you to navigate?
We spend a lot of time on supply chain. We have 24 people that focus on nothing but supply chain. But here's the beauty of what we've been able to do at Saronic. We're completely vertically integrated from start to finish. When I say we're building our own boats and ships, we're building our own boats and ships, right? We're contracting the aluminum and the fiberglass. We're bringing in every single component that is integrated onto our platforms. We're doing final assembly. And we have the capital and the team to bring things in-house when we find bottlenecks bottlenecks in that supply chain. That's very rare and very unique and a very, very strong differentiator when you talk about what it takes to actually get to scale.
Saronic CEO Dino Mavroukas with us later last week. Now, the SpaceX delayed the test flight of its Starship rocket on Sunday, just half an hour before its scheduled liftoff due to a liquid oxygen leak. Now, it marks another blow to SpaceX's launch record after 2 earlier flights this year ended up in explosions. Now, the company is aiming for another launch later tonight. Coming up, the world of esports. It looks to gain a wider fan base, announcing a new tournament. More on that next. Meanwhile, we're watching some outperformers in the world of gaming. EA, Roblox, both trading higher, significantly outperforming, for example, on Roblox, up more than 7% after last week's sell-off. This is Bloomberg Tech. Esports World Cup Foundation. Well, it's announced a new biannual tournament called the Esports Nations Cup, bringing together the world's best players in an attempt to elevate esports to a new cultural and patriotic movement. The tournament is set to debut in 2026 in Riyadh. Joining us now, Esports World Cup CEO Ralph Reichert. There we are. Ralph, give me a sense of why representing countries matters here.
So when we look at what happened this year was the second iteration of the Esports World Cup. It was the first time that all the games industry comes together and competes across 24 different games. And this is a unique moment because esports has been very segregated into different disciplines. And now there's one place where this all happens together. And we've proven that it A, can happen on this scale, and B, be successful with 700 million viewers across the world, 3 million people visiting Riyadh for it, which is, as much as Las Vegas has visitors in 4 weeks. So that was the proof point. Now we want to bring it to the next level because esports has been built out of clubs, which are super important and the origin of it. But for my mom to care, right, to take it to the next step and really make it mainstream, we believe that nations is a very logical step. And by building this platform and the model of the Esports World Cup, we, the foundation, now have the means, the trust of the publishers, the community, and the fans, and the players, most importantly, to do this. And that's why we announced it on Saturday, and we're incredibly excited about it.
Why in the Middle East? Why has Riyadh been so quick to adopt this?
So I think there's a few reasons. I mean, number one, there is, out of the population of Saudi Arabia, 63% are below 35. And 70% of the population in Saudi Arabia identifies as gamers. So it's a huge home for gaming. And then the Crown Prince himself is 38 years old, right? So he's endemically has grown up with gaming. And a lot of people in the government, actually. So I think it's the first government that's out there where, it's consisting of people who really understand gaming from the inside out rather than looking out of it. And number three, Saudi Arabia has publicly said this multiple times, it's diversifying their economy, and tourism is a big one, but gaming as well of this diversification. And the largest esports event in the world is a no-brainer to achieve that.
I mean, they had Ronaldo, of course, giving away prizes at the recent festival, and he lives over there playing as well. I'm interested, Ralph, just about how much money has managed to be built through this. What sort of sponsorship are you seeing? Because the numbers, the viewership, the eyeballs are extraordinary.
Yes. So, I mean, as you said, right, Ronaldo is our global ambassador. So I was on stage with him the other day presenting the trophy to Team Falcons, who have won. Very quickly, second, Team Liquid, an American European crossover. And last but not least, Team Vitality, which is a European club. But we have more than 22 sponsors with many international names like Sony, Amazon, Pepsi, Hilton, MasterCard. So the lineup is incredible. It's well over a 9-figure sponsorship income. But to be honest, the industry is still early. So without host city fees and country hosting fees like we have gotten through Saudi Arabia, at this scale, this wouldn't be possible. And we've seen this a little bit in the last few years, that the monetization is not where it's in traditional sports. And I think one of the things we always miss is traditional sports is heavily subsidized by governments as well, by public money, being it in the college system or in amateur system or in when the biggest sports events come to countries, right, where it's a big marketing and financial support. And I think what we're seeing with the Esports World Cup and now with the Esports Nations Cup is for the first time that governments really at scale invest into it, believe in it, and use it as a cultural tool like they do with traditional sports.
It's been great seeing some of the numbers, seeing some of the celebrations, talking about the next tournament. Ralf Reichert of Esports World Cup, great speaking with you. Thank you. Federal Trade Commission is urging tech companies to resist what they see as pressure from foreign governments to weaken data privacy and free speech protections for US consumers. Now, FTC Chairman Andrew Ferguson spoke to us about the agency's concerns, what he wants to hear from US tech companies.
In the United Kingdom and Europe and elsewhere, American tech companies that do business, in the United States and elsewhere are coming under pressure, sometimes through direct legislation, to potentially censor speech in Europe, maybe even in the United States. Of course, the Brazilian Supreme Court justice is of the view that American tech companies need to censor speech everywhere because it's the nature of the internet. And it was really important to me as an American law enforcer to make it clear to American companies, you don't get to take a free shot at American consumers just because of something that governments in other parts of the world are asking you to do. We've got laws here in the United States that protect the relationship between American consumers and American tech firms. And so no one should think that you just sort of get to do to Americans whatever you want in order to comply with the demands of foreign governments. And that, American laws, particularly the Federal Trade Commission Act that I enforce, don't allow American tech companies to hurt American consumers just because a foreign government is demanding it. And I just wanted to make sure that everyone, consumers and the tech firms, understood this is how I see the law. And I want you to come to explain to me how you are planning to protect American consumers, notwithstanding the demands of these foreign governments. Mm-hmm. And if they aren't, then I'm going to enforce the law against them.
Thus far, we have seen action taken, in particular by Apple, pushing back at requirements by the United Kingdom for a so-called backdoor into data that they hold, encrypted data. I'm interested as to how you felt that unfolded in the UK and whether Apple played by the playbook you wanted to see.
Yeah, I mean, look, and I think a lot of credit here needs to go to the vice president who, sort of personally managed trying to protect Americans from these demands of a foreign government. But yeah, I mean, look, I want American tech firms to understand you have legal obligations in your home country, in the country that made it possible for you to become what you have become, to protect American consumers and not basically to give Americans the short shrift because it would be easier to comply with the demands of a foreign government. And so I'm glad that because of pressure from the United States and particularly from the vice president, that we were able to achieve this outcome and protect consumers from Apple. But this isn't going away. Europe has passed these laws that promote censorship. Britain has these laws. We're seeing this sort of thing happening in Brazil. And it's very important that American tech companies understand you cannot just sort of take it out on Americans in order to comply with these other foreign governments. You have to protect Americans first.
FTC Chair Andrew Ferguson. Go to online and see the full interview. But that does it from this edition of Bloomberg Tech. Let's check in on Intel shares. A historic time for a company when 10% of its equity is now held by the US government. They don't want governance role. But President Trump earlier today taking to Truth Social and now at a press conference discussing the upside for America. Don't forget to check out our podcast. You can find it on the terminal as well as online on Apple, Spotify and iHeart. From New York, this is Bloomberg Tech.